Hello.
Hello, hi Ismail.
Hi.
Right then, good afternoon, ladies and gentlemen. Welcome to the University of Manchester Middle East Centre's online webinar on the challenges and new strategies for fintech during and after the COVID-19 crisis. Our speaker today is Ismail Erturk, a senior lecturer in banking and director of Chinese banking programs at the University of Manchester's Alliance Manchester Business School. Ismail joined the business school in 1987 after having completed his postgraduate studies at New York University. His current research interests are fintech and future finance, central bank policies after the crisis, banking crisis and reform, cultural economy, creative industries, financial innovation, financialization, and corporate governance. He has published 4 books and many academic and professional articles in these areas. He is associate editor of Journal of Cultural Economy. He participated in funded research programs and has advised private and public institutions all over. So without further ado, Ismail, I'll let you take over. Thank you very much for being here this afternoon.
Thank you, William, for your introduction, and welcome everyone to this webinar, and good afternoon to you all if you are based in Dubai and in that region. I will talk about what COVID-19 crisis means for the fintech industry, because this was an industry that was growing very fast, and Dubai was one of the important international centers in promoting fintech, inviting fintech. COVID-19 has caused some disruptions in this sector. So a disruptive technology has been disrupted by natural events. So what I'm going to do, I'm going to look at what the impact has been, and so what the challenges are, and then what new strategies fintech can follow to survive and then prosper during and after COVID-19. Now, this will be framed by my earlier work on financial innovation and something I called financialization. I mean, those of you who have been taking the leading and managing global environment part A on the global MBA program will be familiar with that concept of financialization. So in a way, it will be good to recall that knowledge, those of you who have attended, but those of you who have not, I'll talk about why financialization is important. Now, let's start first by looking at the valuation before the crisis. Apologies for the technology, because my full screen doesn't work all the time, so I might be switching to partial screen. Technology is good in many ways, but then it can be unexpected. Right, so I'll start by looking at the valuation of fintech companies. Just before the COVID crisis, as you can see, the valuation, the PE multiples for fintech companies on average was much bigger than the financial institutions, big banks. So the reason for that was because fintech companies are considered to be disruptive and would steal market from old financial institutions. Now, this is where an understanding of financialization is important, because valuations in stock markets or valuation by investors do not necessarily reflect the true future potential of a business in a financialized economy. Now, what does it mean is because in a financialized economy, we are not short of funds, we're not short of money. And that money, investments, look for high growth sectors, and sometimes they can get carried away. This is something that we know as a bubble happening in a particular industry in the stock market. So in a way, the fintech companies were benefiting before the COVID crisis from low interest rates and the bull market in stock markets, and most of the investments were not really looking at the true profitability, but they were looking at more what I call stories and narratives about fintech. Now, stories and narratives about fintech was after the 2007-2008 financial crisis. Big banks came under criticism that they were not looking after their customers, especially SME customers, and we needed competition, and the competition came in the form of technologically advanced fintech companies. Now, in a financialized economy, stories are important. The narratives are important. When I talk about stories and narratives, these are really the expectations and then sometimes exaggerations about what technology can do. And we have seen this in the past as well. The stock markets tend to overvalue some sectors because there's a consensus that that sector or that technology will wipe out the old firms. Of course, it is true, they bring something new, but stock market valuations do not really reflect the true profitability. So what we have seen before the crisis, fintech companies benefiting from this story and narrative that fintech companies using blockchain, artificial intelligence, big data will wipe out the traditional banks. Now, why do I call it a story? Because really these banks, although they're not technologically as advanced and they're not treating their customers well, and the stock market valuations are low, these are giants. So one statistic, for example, is when we look at the total fines paid by global banks between 2008, when the crisis happened, and 2018, collectively they paid $350 billion in fines. So this is like us paying a traffic fine, a parking fine. So for big banks, they can afford to pay collectively $350 billion. And some banks individually, like UBS, they paid $20 billion. Whereas when we look at the money that went into the fintech sector through venture capital, it was only about $200 billion. So that's what I mean. So banks have big pockets. So any sort of disruption in a sector has to take into consideration the financial might of the old companies. But nevertheless, before the crisis, stock markets favored fintech and they had high valuations. Now, after COVID, we have seen all valuations coming down, especially real estate and energy in S&P 500, but it reflects other stock markets as well. So as you can see, when you look at financial companies, financials index, versus the information technology index. So information technology index, the companies in information technology or in technology sector has suffered less than financial in the drop in the valuations. Now, why this is important? As you know, fintech brings together financial and technology. So those fintech companies who are more technology than finance, i.e. techfin, like Alibaba is as a techfin and financial, or Tencent is as a techfin. They suffered less. They're in a more favorable position because with COVID, there has been an increasing use of digital technologies, whereas financial companies, they suffered more. So fintech companies who rely on selling financial services like Revolut, who sells foreign currency payment services, or some fintech companies who lend, their valuation have come down more because financial consumption has not increased. And then those customers who borrow money because of the decline in the economy after COVID, the default rates would have rise. So one consequence of the COVID is those fintech companies who are more tech-fin, they benefited more and they're in a better position than those in fintech, i.e. financial side, stronger. Now, let's look at some names in winners and losers during COVID-19. So those fintech companies who are in payments, although payments is finance, but it's really heavily digitalized. So these are basically digital payments. They benefited because people, when they stay at home, they have to use digital payments. So those companies have benefited. So in the US, PayPal and then Square, their values have gone up by 33% and 26% in the stock market. Because PayPal, for example, after the COVID crisis, had increase in customer numbers on a daily basis, 250,000 new accounts. So it's a huge growth because people are using digital payments. Now, some people, especially the younger generation, they always use digital payments or digital financial industries, but the elderly part of the society, they've always been a bit cautious using digital. So what COVID-19 has done, now everyone has to use digital, so you don't have a choice. So that benefited companies like PayPal, who increased their customer numbers in huge amounts, and then their valuation went up. Now, who lost? For example, those startups who were expecting high valuation because investors after COVID-19 have become more cautious, and there has been a flight to keeping cash and gold, and consequently those startups have to delay the fundraising activities, and a survey in London found 40% had to delay. Now, will they be able to find investors when COVID disappears, when it disappears? So that's a question mark. But what this shows is, if you are a new startup in fintech industry now, life would be much more difficult than before COVID-19. But it also means that you need to be now more clever. So you don't just need to tell a story that you are a fintech, but what part of fintech you are. Are you in the payments? Are you in lending? Are you in the technology sector? So I think this is when people start to look at fintech companies just under the, not just under a big title of fintech, but they want to see what role they play under fintech. So if you are a fintech company, or if you want to set up a fintech company, now you need to come out with a new narrative story about yourself, and then look at your business model again, and basically remarket yourself. So that's going to be very important after COVID. For example, Monza, they suffered, the valuation went down 40%, and they need cash to continue. So you also hear these big names who rely on selling financial services, because Monza relies on people traveling and using its card for making cost-effective foreign currency payments. Now, all traveling have stopped, so Monzo and Revolut, who relied on a business model where they would get business travelers and then sell them financial products later, they are facing serious valuation issues. But on the other hand, just like PayPal in Europe, in Holland, Adyen, the valuation went up 36%, again, because they are in the payment part of the fintech. Another company that benefited is in Mexico, a company called Confio, but this shows that you also have to be lucky. Confio raised finance from SoftBank. As you know, SoftBank invests a lot in the fintech industry, but they raised the money in December before the COVID crisis started. So if you are in a lucky situation that you raise funds before COVID-19 started, that also makes you, even in the lending business, in a more advantageous, it puts you in a more advantageous position to gain market share. However, in Confio, although they will increase their market share, because in Mexico, banks are not lending to SMEs, so Confio can use the funds raised before the crisis to increase their market share, to get new customers. But one thing that you have to be careful, a company like Confio, you get the money back from these SMEs. So then the modeling of credit risk and getting your money back, because digital companies, fintech companies have not really went through a business cycle where they suffered huge default rates. Now, this will be a big test for fintech companies, how to manage problematic customers. Now, another example is Cabbage from the US. They suffered because they were in the business of lending money, and lending money requires raising finance. So they couldn't raise finance because, as I said, the investors are now putting their money in safe assets. So they had to furlough a significant number of employees. They stopped lending, so basically they're not growing. But what they did, they learned a new skill. And I think this is a very important skill for fintech companies, which is lobbying. Because so far, fintech companies didn't have to do any lobbying. Narratives, stories about fintech was enough. That people considered you as a disruptive company, and you could raise money. But in difficult times, you need to develop new skills. So this is a very important point for managers, owners of fintech companies, because those managers and owners, they have very good, excellent skills in technology, but unfortunately, most of them don't have skills about lobbying, about managing their cash flows, managing relationship with other industries. So that skill is going to be extremely important. So it is not enough now just to have excellent technological skills. You need to have other business skills, and those fintech companies who develop those skills quickly and effectively, they will survive COVID and then post-COVID better than others. So Cabbage, they use lobbying skills because in the US, the government was allocating money to SMEs. And this is an area that the fintech companies have technological advantage because they're online platforms. They can reach SMEs easier. They can assess their risk easier. They can get rid of the costly, time-consuming form filling that the old banks force on their customers. So they're convinced that they can use the technological superiority to banks to distribute the money quickly. Because one of the problems we have, especially in the UK, banks are very slow distributing the money that the governments are providing to the SMEs especially, and then they want that money to be distributed quickly. It is not enough for governments just to announce how much money they're going to distribute to save the economy from the COVID-19, but that money has to be dispersed quickly to the right people, and Cabbage and fintech companies have superiority, and they lobbied the Treasury Department and the Federal Reserve, and as a result, they got a slice in the pie. So for Cabbage, it meant they lent $3.5 billion, which is very significant compared to what they were lending before, because this time the money comes from the government directly. They don't need to raise the money, and then that generates fee income, which is quite significant. Similarly, another payments company, Square, convinced the central bank that they can disperse this payment protection, payroll protection schemes, and they got some revenue. So this is an adaptation to the government and central bank lines of credit to the economy. But again, having said that, Cabbage distributed $2.5 billion, but the likes of Bank of America, JP Morgan Chase, they are distributing about 30 billion. So size again becomes important. Now, another important thing is governments trust, although they recognize the regulators that fintech has technological superiority, but they don't have the same level of capital base as banks. So as you can see here, after the 2007 crisis, banks are much better capitalized. So central banks trust these big banks to, distribute the money because they can. They have huge capital base to be able to absorb the losses from those loans. So this shows how in finance going forward, your capital base will be very important, and big old banks have advantage in that area. Now, if you put this into a matrix, as you can see here, if we split the fintech companies into challenger banks, consumer lending, mortgages, SME lending, as you can see, fintech sector will have differential depending on whether you are a fintech or techfin, as I mentioned earlier. So when you look at the column at the end, valuation, M&A implications, there's only one green and then three stable, but the rest is red going down. If you look at the enabling fintech, because what COVID-19 showed, which we all knew, that banks have very poor, in general, technological infrastructure. So with COVID, they realized with most of their customers accessing them online, they need to develop or mobile banking have gone up. So there's an increasing demand investment in technology in the back office. So if you are one of those fintech companies which enable banks to transform themselves digitally, your valuation will go up. But when you look at like challenger banks like N26 in Germany or Monzo, as we mentioned, where they rely on really they're competing with banks, providing full range of banking services, because they're not generating enough revenue at the moment. Their valuations have suffered. But then what will happen is we're likely to see bigger banks buying these challenger banks or these banks selling more of their ownership. For example, with N26, Allianz and Tencent have invested in N26. So as a result, I think we're going to see more consolidation and bigger banks buying the smaller fintech companies. So insurance, although the valuation goes down, but those insurance fintech or insurtech companies who can generate revenue, they'll be in a better position, because most people staying at home, they tend to renew their policies, insurance policies online. So that gives an advantage to, and also you need to compare prices. So any fintech company, insurtech company providing comparison from computers or mobile phones will have an advantage. But as you can see here, valuations tend to come down with those fintech companies where selling credit is higher, where they rely on selling credit. And wealth management as well suffered, because people tend to put their money in deposits rather than put their money in stock market. So what this shows is different fintech companies, as I said earlier, will be influenced differently, but then it is whether like Cabbage, you are adaptive, change your managerial skills to adapt, but also then we'll see consolidation. So again, then instead of selling a fintech company to a big technology company or a big bank, I think this is when fintech companies can look at and then merge. Fintech companies can merge to create scale and size to protect themselves from being bought by big financial institutions. So M&A skills will be as important as the lobbying skills in fintech companies. Now, in China, where COVID-19 crisis has been dealt with quicker, we have seen, for example, non-fintech companies like Bank of China, China Construction Bank, and China Merchants Bank becoming clever and then providing online and mobile services that smaller fintechs or even bigger fintechs like Ant Financial or Tencent cannot provide. So COVID in China has allowed big Chinese banks to invest in technology and digital technology as well. Because as you all know, fintech sector is not just the small startups. Big banks have their own strategies, and in some cases they create their own internal fintech startups within the big bank. So I think those units will be growing, and banks realize that they need to provide more digital services through digital platforms. Now, Ping Bank in China, they belong to a bigger financial conglomerate. They have always been ahead in fintech and insurtech. They've also used that opportunity to expand, but obviously Tencent and Financial as well. They benefited a lot from the COVID as more people use digital technology. But China is really specific, different in fintech, because in China, big banks, old banks, they don't have the retail banking expertise, and then China has grown so fast, so the fintech sector in China is a lot different than other countries. But fintech as a sector, as a technology, continues to be more disruptive in China. Now, in the UK as well, some fintech companies used COVID as an opportunity to develop products that will be useful during COVID-19. Now, the future of COVID is bright in the sense that open banking is here with us to stay, and all countries in the world they develop their open banking. Open banking means then fintech companies will always have an opportunity using the data that the banks have on their customers, but making it more user friendly. For example, TrueLayer in the UK, which is an API provider, they reinvented themselves to be more socially useful financial institution, because one of the sectors that suffered in the UK, and it is true in all the countries, charities, because charities rely on donations, and TrueLayer would allow them to use more digital methods to raise donations. So in a way, they help the charity sector by allowing them to continue to raise donations by becoming more digitally savvy. And now you have other companies like Kalgira. Again, there are vulnerable people because everybody is at home, and especially the elderly people or people with less education. Unfortunately, during these periods, we see some people trying to use fraudulent means to have access to these people's bank accounts, or try to exploit their vulnerability. So Kalgira provides an app which allows vulnerable people during the COVID-19 period to protect themselves against such exploitation. So as you can see, after 2007, the driving story narrative in the fintech sector was banks are not good for that. They're not treating their customers well. They're not innovative. So we need more competition. So the competition, technological advancement were the key themes in those stories and narratives. I think one of the things that post-COVID, for fintech to be successful, to emphasize the social usefulness, how they help the society and the consumers in times when economy is not doing well, and then there are vulnerable people. So fintech companies need to reinvent themselves by using these more socially relevant narratives and stories like the examples I've just given you. So this shows you can be a startup now, although the money is coming less, if you can identify a need and then create a story for that need. But that story has to be more than being disruptive. It has to be now being more socially relevant and contribute to the economic recovery. So again, there are examples of new startups or fintechs reinventing themselves during this period. So like Credit Kudos is another one using open banking data, but this shows that open banking will make fintech still very relevant, so the future for fintech is very much bright, because all countries want to have more competitive financial sector, and they will continue with the regulation and expansion of open banking reforms. So to sum it up, I see a pincer movement on fintech. On the fin side, well-capitalized and big banks are preferred vehicles to distribute money by central banks, because they are well-capitalized, strong, and bigger reach. And then on the technology side, big tech companies like Facebook, Google, Amazon They'll start looking at providing more financial services. So to come out of this pincer movement, fintech has to be more clever in strategy and also making itself relevant for the COVID and then post-COVID era. So what does it mean then? A fintech company before the crisis, they could get high valuation because they were technologically disruptive and they were bringing a competition in the financial sector. I think with COVID and after COVID, the disruption story will be less relevant. It will be still important, but it has to be linked with being socially useful and helping the financial consumers, and especially in an environment where incomes have fallen down, unemployment have increased, identifying the needs of consumers and providing them faster, quicker, better solutions. But then the issue would be how to become a fintech company when the economy has declined and the recovery may take time to happen. So that means you need to look at more cash generating business models and better stories based on open banking regulation. Now, I'll stop here.
Perfect. Thank you very much for that, Ismail. That's very kind of you. Brilliant presentation and very, very insightful. For those of you who already asked questions, please feel free to do so now. We'll be asking them to Ismail, so please feel free to use the questions box to do so. Ismail, I have a question here from Tamer, I believe, and he is asking, in that case, what sector, obviously you're not probably giving out any sort of advice, but what sector would be attractive in this current environment? Would smart tech in pharmaceuticals be attractive currently?
Yes, I mean, pharmaceuticals and health sector, they benefited from the COVID crisis because demand for health-related, especially the COVID, not just the curing the COVID or therapeutics, but also there's a big now concern about the hygiene because if you want to reopen the economy, people have to have trust in the hygiene. So for airlines to fly, for hotels to reopen, for restaurants to reopen, even universities to make sure that the students are protected well, that will increase demand on the health sector, and the more sort of digitally savvy those products and sectors are, they'll be in a better position. When I say digitally savvy, can you use your mobile phone so that when you enter a building, a restaurant, a hotel, it can tell you how many people had COVID infection or how often the toilets are cleaned and what kind of. So I think it will come with app, not just for the consumers, but also for businesses. So they can use digitally enhanced methods to create transparency about the hygiene conditions. So as a technology, as an industry, yes, pharmaceuticals and health sector will benefit, and we need that kind of sector and innovation as well to get the economy working.
Perfect. Thank you very much, Ismail. We've got another question here. Is this a good time for fintechs to support SMEs who are the most in need currently?
Exactly. I mean, because for fintech companies, the important thing is increasing your customer base. The more customers you have, the more revenues you're likely to get. Of course, it comes with a risk. The risk is with COVID, we have seen a huge, drop in economic activity. There are uncertainties about how long it will take to get back to normal economic growth. Yes, it opens opportunities, because in times like this, banks tend to treat their SME customers badly. And also it opens up new opportunities too, because there are so many government grants, loans, support schemes that directly concern SMEs, but an average SME doesn't necessarily know what those government support mechanisms are and how they have access to them. So fintech companies can work with banks because with open banking and allow SMEs, even if you don't provide the lending or the financial product yourself as a fintech, you can direct the SMEs to banks to demand those products. So definitely, serving SMEs is going to help fintech, but by being very clever which types of services to provide.
Perfect, fantastic. Thank you for that, Ismail. We've got another question here from Malih, which is a very interesting question. What will be the best way for new fintech firms to obtain VC funding, and what's the right market now?
Well, that's the area where it is very difficult, because most VCs are now being cautious and they tend to invest in less risk-free, but it doesn't mean that the money exists. The money is there. So to get VC support, a fintech company now has to have a stronger business plan. So it's not just telling them how wonderful you are technologically. It's also coming out with a business plan, cash flow projections, where the revenues will come from. So VCs now will look at revenues rather than just hypothesize growth rates or the strength of the technology behind the fintech company. So better business models with realistic revenue generating activities, they're likely to get money from the VC sector. So a different set of skills and different stories to tell them, emphasizing the business model, cash flow projection, etc. So the money is there, but you need to change the pitching strategy and then what you say in your pitching. And then those fintech companies, again, as I said, fintech is a big umbrella. What COVID has shown, fintech is really very different types of businesses, providing from technology to banks to credit evaluation to lending. So if you are a fintech company, identify yourself a niche area which benefits from the COVID and post-COVID economic conjuncture, and then those designed fintech products companies will continue to receive VC support. Like payments is one of them. It's growing, the valuation is high, but again, you need to have an interesting story, interesting business plan, business model, and then cash flow projection.
Brilliant. Thank you, Ismail. We've got another question here, which I guess kind of complements what you've just said, but Thuray is asking, do you think that all fintech companies have to fundamentally reshape the way they do business?
I think the first thing, COVID and then post-COVID, we'll stop using the term fintech. We're going to use, as I showed, which space in the financial sector you occupy. So I think the first step is forget the big umbrella and find the specific space and find an interesting story. It could be SME lending, or it could be credit evaluation. And what will happen now? Defaults are high. So how do you reduce the credit losses? Or you look at yourself an interesting space, like we said, health and pharmaceuticals will benefit. Can you find health tech, fintech that is related to health tech? And as I mentioned, insurance is important. So can you be InsurTech, which allows comparison to people? So I think the first step is forget the big umbrella term fintech, but use a niche area under fintech and emphasize the benefits to the customers and possible investors of that particular niche area.
Brilliant. Thank you, Ismail. We've got another question here from Mohammed Rushdie. He's asking, how is the relationship between banks and fintech, and will it be more cooperative or will it be more competitive?
I think it will be cooperative in the sense that banks will buy successful fintech companies because competition is very uneven. Fintech companies have always been small in size. As I said, I mean, banks, we're talking about in any country, like in the US, when you look at JP Morgan, we're talking about a company with $2 trillion assets. In HSBC, again, these are giant banks. So fintechs, they don't have the capital base, so they cannot really compete with banks. So it will be more cooperation, and then also banks buying successful fintech companies.
Perfect. Thank you, Ismail. We've got another question here from Suleiman, and he's saying, as every industry and business model, there are always threats and weaknesses. Aside from the COVID situation, in your view, what are the other threats related to fintech?
I mean, COVID obviously causes. I mean, we have the COVID crisis, but we had the impact of COVID on the economy. So the most immediate threat I see to fintech, again, I shouldn't use fintech as an umbrella. As I've shown, different parts of fintech will be influenced differently. But those fintech companies who had a business model in originating loans or lending money, default rates will increase. So that's the threat. Increase in default rates will be a threat. And also the other threat is the stock market, because fintech is, yes, it's a technology phenomena, but equally it is a stock market phenomena. When I say stock market, really, I mean the financial markets, which valued fintech companies significantly. So for fintech companies to prosper again, stock markets need to go up. So we need to get back to a growing stock market environment, so that the startups can have a higher valuation and a larger number of investors. Now, the other threat is really the central banks. Because, I mean, central banks, regulators in general, they want fintechs to be successful, so they bring competition to the banking sector. But after the COVID crisis, central banks have injected so much money into the economy, and they think big banks can do the job better than fintechs. So in an ironic way, central banks, their quantitative easing policies and other facilities they introduce, which are huge, can be a threat to fintech. But just like, you know, every threat has a opportunity as well. Then fintechs have to be lobbying more, and also as a fintech sector, when you look at the fintech conferences, they all came together to tell each other how wonderful each of them were. Now it is time for fintech companies to act and think collectively to promote themselves to the central banks, which are a threat, that they can deliver things. They can make the central bank quantitative easing facilities better for the economy than banks. Now, that's a challenge for fintech sector. Act collectively, lobby together, convince central banks that you can do a better job than big banks in distributing money, so that the money is spent effectively to get the economy growing again.
Brilliant, thank you, Ismail. Another very short question, but an interesting one nonetheless. Are we going to witness the end of cash anytime soon?
I mean, clearly, with COVID, people had to use online and mobile payments. So yes, the cash, whether you choose to use it or not, you had to get rid of it, because staying at home, you cannot use cash to buy online or to shop online. But also with COVID, the hygiene issue, because anything that you touch, and cash is something that you touch, that will be another reason for people not using cash. So yes, I mean, COVID definitely helped digital payments, and it was bad news for cash.
Perfect, thanks. And we've got one more question here from Mohammed. What is the effect of devaluation on challenger banks due to COVID. Will the same growth, I'm guessing as precedent, will be expected after COVID?
It is something that's very difficult to predict. I think it will be different in different countries and different regions. For example, China has recovered and it is growing. And also when you look at certain industries like the occupancy rates in hotels, the restaurants. So China has definitely recovered better, and it won't grow at 6-7% this year. It will be lower, but still a positive growth. Whereas Europe and US, the story will be different. It will take longer for the US and then Europe to recover from COVID. But most expectations are 2021 is when we'll get back to the pre-COVID growth rates. So I can't see, pre-COVID growth rates being achieved before the end of the year in general in the world. Now, what's interesting is emerging economies suffered more as well. So I think emerging economies, it will take them longer, especially those who are not in Asia. I think we need to separate Asia, then that Africa and South America. So South America, it will take longer because the way the COVID is hurting those Mexico and then Brazil. Although Argentina has dealt with it better, but Argentina is suffering from the general decline in trade. So emerging economies, it will take longer to recover. Asia, it will be quicker, especially those countries with close trade relations with China. In Europe, we will see Germany recovering quicker and better than Italy. But it will take, again, Germany to recover for a while. It won't happen until 2021. So, yeah, in different regions, different countries, it will have a different pace. But Asia, China, the second half of, or the last quarter of 2020, pre-crisis growth rates can be achieved, whereas the rest of the world, it will be, I think, 2021. And for the emerging economies, I suspect it will be the later part of 2021.
Brilliant, thank you. We'll take another couple of questions. We've got one here from Amal asking, which new fintech companies do you expect to succeed and grow, and why?
I mean, those fintech companies who make a very good and clever use of open banking data, they're likely to prosper. And also those fintech companies who do not just focus on technology, but focus on business models, revenue generation, will be successful because there are still lots of opportunities in the financial sector. But so make better use of open banking data, find clever products to sell to the banks as well as to the financial customers, and also finding a cost reduction, digitalization products, because banks, although they are big, in times like this, they're going to suffer from credit losses, which will make then the cost base, the back office efficiency, much more important. So banks will be spending lots of money to improve that digitalization process, to provide better services to their customers through mobile phones, online. So fintech companies should look at banks as their customers. Those fintech companies tend to be more successful because banks have money. To provide them enabling technologies, and also technologies that will help banks to reduce their cost base.
Perfect. Thank you, Ismail. We'll just take one more question here. It's quite an interesting one as well. What are your views around speculation GCC countries and currencies may depeg from the US dollar?
I find that probability very low for a couple of reasons. Because one of the things that people have realized during COVID in emerging economies, you need to have access to US dollars. So because international trade is done through US dollars, and those countries, obviously Gulf countries, they don't borrow. Those countries who borrow, they tend to borrow in US dollars. So to service that debt, they need to have access to US dollar. Now, with the Gulf, the situation is obviously different, and also in different Gulf countries, it is different. They're not all the same. But the oil prices play a big role. I think that will be the major issue. What will happen to the oil prices? And we know some Gulf countries have started to borrow money as well, and they borrow in US dollars. So really, both the key commodity and the currency in which debt is raised, and also the currency in which lending is done, is still US dollar. Because we need to separate weaknesses of the US economy. Of course, China is the second largest, and it looks like it's going to come out better from the COVID than US and then Europe. But that's what we call the real economy. Yeah, making things, producing things. We also have a huge financial economy. So this is your stock markets, this is your asset management sector. So in financial economy, there's no competition at all between China and the US, because most of the international debt is raised in US dollar. Most of the biggest asset management companies in the world, I'm not talking about banks, biggest asset management companies in the world are based in the US. And the largest one is BlackRock, managing $6.5 trillion of assets. And then the second one, Vanguard in the US. And nobody has heard about Vanguard, but Vanguard is a big asset management company managing, again, about $5 trillion worth of assets. And these are all dollar denominated. So the financial markets are driven by US dollar denominated financial assets, debt assets, and investment assets. So I can't really see a realistic reason why a dollar would be irrelevant for the Gulf. Of course, when you peg your currency US dollar, then you tie your monetary policy to US dollar. And then US dollar has gone up. So if you're exporting, it depends what you export. If you export commodities, that's good. But if you export competitive products, that's not good. But really, I can't see very strong reasons why the Gulf countries should depeg, unless you redesign your economy to export non-commodity services and products.
Brilliant. Thank you very much, Ismail. That's very insightful. And on that note, I think, ladies and gentlemen, we'll close the session now. Thank you very much for attending it. We thoroughly hope you've enjoyed the session. Thank you very much, Ismail, as well, for your time for the presentation and answering all these questions. We really do appreciate it. And we look forward to receiving you all in the future for new webinars. So do take care of yourselves and have a very good evening. Thank you very much, ladies and gentlemen. Bye-bye.
Thank you. Bye-bye.